Hey everyone, welcome back to the MHP Show podcast. I'm your host, Derek Vickers, and here on the MHP Show, we're talking about mobile home parks or manufactured housing communities, whatever you want to call them, and how professional you want to be about it. It's a mobile home park, trailer park. I don't really like calling it a trailer park, but sometimes some of them warrant calling it that name. But look, that's what we talk about on the show. We talk about the operations. We talk about, the stuff that we deal with in the day-to-day operations of these mobile home parks. We talk about deals and whatever. But before we get into the show today, I'd like to tell you guys a little bit about our fund, Fund One. We have 7 properties closed in the fund. We have properties in Tucson. We have properties in the Largo, St. Pete area. We have properties in Clearwater. We have properties in Tampa, north of Tampa, and Lakeland. These are hot markets, right? These are highly sought out markets. These are markets with a massive shortage in affordable housing, where lot rents are probably the highest in the nation, somewhere close to it. I'm sure some places might even be higher. But look, these are great properties. So not only do the deals that we buy in Fund One actually have the same fundamentals of mobile home parks, low supply, high demand, it's affordable housing. They're not building any more of these things, and it's very difficult to build any more of these things. But we also actually, in my opinion, in markets like that, in hot markets, those things that we love about mobile home parks is more pronounced, right? There's actually there's a higher barrier to entry. It's even more difficult to build in these areas. There's even more demand for affordable housing in these areas. And look, these areas actually allow us to execute business plans even faster. So look, if you want to be a part of Fund One, look, the benefit of you getting now is that distributions are, going to be starting in a relatively short period of time. Can't tell you exactly when that's going to be, but it's going to be soon. And you don't have to wait. So you can come in and start reaping the benefits of that right now. Now, the investors that came in early got enhanced returns, and they're going to get a little bit more bonus depreciation, but that's okay. So, depending on what time you came in, you still get benefits, right? And I think all in all, people are looking for a way to preserve their capital, preserve it against inflation, right? Because, inflation, like, it's so hard to see on a daily basis, right? And then we look back and we're like, oh shit, stuff like that $100 actually doesn't buy what it used to. So that is happening to you now. If you have cash sitting in the bank, right? If you have cash sitting in the bank, it is dying, right? So once you put that money in an asset, a real asset that the value is going up, and we're actually going in and forcing the value to go up because we're adding that value, you actually you like arrest the decline in value, right? Because you're gradually going like this, but when you invest, it starts going like this. So you actually put a stake in the ground and say, hey, I'm done with this inflation BS, right? So if you want to like preserve your capital into an awesome asset, the most recession resistant asset, then reach out to me, Derek at victorycapital.com. You can schedule a call with me or somebody on the team. We'd love to talk with you and show you the value about coming into Fund One and show you which properties we already have in there. If you're around local in the area, I'd love to set up a time. You and your friends can come. We can go to dinner. Would love to take you by the properties. So today, I still get asked this question a lot. How are you looking at deals, Derek? Let me get inside your head on how you're looking at deals. And sometimes like I get so like into the, I've done so many of these, like I've done and looked at so many deals. And this is, guys, you got to understand, like I looked at multifamily in the beginning, but this is really the only asset class that I really know, right? So it is the only thing that I've like underwritten, really. Like again, I underwrote multifamily and sort of tried to figure that out. But my point is that I have done these numbers a lot. So when I do the numbers really fast, sometimes I don't even I'm like, oh, what am I doing? But I understand it, right? And so today I'm going to do my best to codify this for you. And I did an underwriting webinar. I don't know, it was a while back, but I'm going to go over some of those principles that I talked about, and I'm going to try to use the whiteboard. Maybe it'll work, maybe it won't. I feel like I don't know. Sometimes when I use it, I'm like, yeah, that wasn't very good, Derek. But I don't know. We're going to see. And if it doesn't work, great. If it works, awesome. But I still think you'll be able to understand this a little bit and just get inside my mind and how I look at a deal. Now, what I'm about to tell you is probably it could be different than the way that you look at deals or you've been taught to look at deals. The beauty of mobile home parks is that there's really like some interesting ways you can add value versus other asset classes, right? So it's really flexible in the things that you can do to a degree. You can put a new home in, you can tear an old home down, you can put a new home in, you can rehab the old home, you can have someone bring in an RV, you can you've had these mom and pop owners, put a wall in the middle of a mobile home and make it 2 units. I do not recommend that, by the way, but you can get creative in this asset class, right? And so I'm just going to show you the ways that I look at a deal. Some of them you've probably heard before, and the first one here, when I first look at a deal here, the first thing that I'm looking at, right? Well, first I'm going to look at this. I'm going to look I'm going to look at the location. You see that there? That's number one that I'm going to look at. And you guys hear me talk about this stuff all the time. I'm going to move this a little closer. So I'm going to like the location is the most important thing to me, right? Is it in one of those areas that I like? So you got to find those areas that you like, right? So that's the first thing. You're looking at a deal, boom, 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 boom. You're getting deals sent, right? You're whatever, like boom. Oh, it's in that location that I like. Okay, check. Right now, I can move on to the next thing that I look at. Now, I will say this: you guys know where I like to buy. I like to buy in great markets, right? And a great market for me is a large MSA. I like 1 million plus people, 1 million plus. My handwriting sucks, by the way. So if you're watching this, if you can't read it, like I'm gonna do my best. so sorry. Um, I like that. I like that 1 million plus population, and I like a higher single family home value. Which, in this, if you're in this, you're gonna have pretty high single family home values. So let's just look at this really quick. Let me go to how do I find this? Well, I like to go to best places. I mean, if you look at these deals, I mean, God, you got to know to use best places here. Um, so I'm just looking up Tampa, Florida, because it's my favorite market. But you can go like if I just click the Tampa, St. Pete, Clearwater Metro, I am going to see. Um, yeah, so the average cost of a home in the Tampa, St. Pete, Clearwater Metro is 338,000. Right, so that's pretty high. So I like that. Right, I like that. Like I don't know what the mortgage payment would be on that, but I mean it'd probably be pretty high. Let's see, mortgage calculator. Let's just see how accurate this is. Well, I didn't think this was going to take that long, but on looking up this mortgage guy. Oh, here we go. This one will probably be better. Okay, let's say home value 338,000. Down payment. It defaulted to 8,000. Said the interest rate would be 6, which I don't think that would be the case right now. I think it would be higher than that, right? Let's just say 7. At 7%, it would be, and this calculator sucks, but it looked like it was over 2 grand a month. Let me just see this one here really quick. But I just want to show you as to why. And you need to, well, this is saying you put 20% down. I mean, most people don't have 67 grand to put down on the house. And this is defaulting to about 6% too. So maybe it is. And look, this is if you put down 20%, it's 23.72 a month, right? So let's say you put down 5%. I don't even know if they'll let you do that now. Well, okay, 338,000. If you put down 20%, it's 1,900 bucks a month. If you put down 5%, it's 2,200 bucks a month. And that's assuming it's 6% interest. I mean, maybe it's I don't know exactly what it would be. Maybe we could, if we were doing this live, someone could tell me, but it's 7%, it's 24.25 a month. Okay. So that's not in the realm of affordable housing typically. Now I know that there's probably houses that are less expensive in these areas, right? But there's probably less of them. There's less of them. And if they are, people get them and then they're not moving from them. Whatever. My point is I like to be in an area where the home values are relatively high as well. If we look at another area that I like here, let's just go to DFW. We actually have a deal under contract in this metro right now. Let's see, cost of living. Yeah. So Texas home's about 300 grand in this metro. Well, no, that's Texas. In the DFW area, it's 350,000. So it's sort of the same. It's the same as the Tampa Clearwater metro, right? I think there's 3 or 4 million people in Tampa. There's about 6 or 7 in the DFW metro. So it fits these things, right? So the next thing I'm going to look at, right? Is everybody got? I hope you got that on the location. Like that's important, right? And that's what a good location is to me. Like if you want to buy it in the middle of nowhere, that's fine. You just got to define that, right? I just don't do that. So I don't really know anything about that. I mean, look, if you send me a deal, I'm sure I could do the math on it. But look, that's the first thing I check. Second thing, price per pad. Okay. Now, what do I mean by price per pad? Well, I mean price per hold on. This is one thing that I do. Occupied. Price per occupied pad, not just price per pad. And why do I do a price per occupied pad? Well, because in my opinion, the vacant lot has very, very little value to me. It just doesn't have that much value to me because with the bureaucracy in Florida and all the BS of getting these permits to move in these homes, it's just not that easy. It's just not that easy. It's not that easy to pull the homes in, right? And then you got to find a mover that's not a knucklehead. And so we just don't do a lot of that. So we just we buy these parks that are value add, and maybe one day we'll start pulling in more homes. But I look at price per occupied pad because I'm not going to do anything with the vacant lots. Is the short answer. Now, if you are, you just got to have the money to do it, and you got to have the patience to do it. So I'm looking for price per occupied pad. Now, how do you know this? Well, obviously you're doing research. You're looking and seeing what deals are going for in the market. Like this is why I tell you got to pick this first. So you got to know this. Otherwise, you're going to be dancing around and not know what the hell you're doing. So we found the park and the location. Hey, we love it, right? Let's look at the price per pad. Well, what's a good price per pad in that area? Well, I guess that can mean different things for different people. So you got to determine what that is if you're searching in a market. And you're like, hey, this is a $700 lot rent market. If you found a deal for $35 a pad in that market, would it be a good deal? Absolutely. Right? Absolutely. Right? But that's probably not going to happen. And if you can get 700 in the market, you might not be able to get it for 30 a pad. I wish you could. 4 years ago, you might have been able to. Um, so look, if like for me, and if I can find something for 50 a pad in Tampa, I'm stealing the damn thing. Right? It's gonna be hard to find. It's gonna be hard to find. And that used to look expensive back in 2020, right? And so, we were buying everything at 40. Well, it didn't look that expensive. We were buying everything at 40, 45 and 50 a pad, 40 and 50 a pad in 2021. And now I wish we could get something for that in Tampa. Now, we did just get a deal down in the Clearwater St. Pete area for 58 a pad, which was a steal. It's a great deal. But look, you got to understand what a good price per pad is in this market. If the lot rent in that market, if you're in Alabama and the lot rent, you're like, hey, I know it can be $200 in this market. If the park's 45 a pad, probably doesn't shake out. Just do the math. Just do the math on that. We'll talk about the math. But I'm telling you guys, like, you're going to have to look at deals. You're going to look at so many deals in this market. You're going to have to be calling around. You're going to have to talk to your wholesaling guys. You're going to talk to the broker guys and just have them start sending you deals. If you like deals in Austin, Texas, have them start sending you deals within a 30-minute range of Austin, Texas. Get your wholesalers to start sending you deals in that area so you could start just running the numbers. Run the numbers and, see what these things are selling for price per pad. Right. And just figure out what a good price per pad for you in that market is for you to add value. Now, some of the big guys, maybe they're just buying for depreciation and they don't care. They're like, okay, yeah, 120 a pad is good in that market, right? Because they don't necessarily need the returns like you do. So you need to figure out what price per pad you can still generate your returns on in the market. And this is just going to come from like doing it and doing a deal and like, if you haven't done the deal yet, at some point you're just going to have to pull the trigger and do one. If you're serious about doing one, like, and you're just going to have to get in there and figure it out because some of this, like, is not going to get real to you until you do a deal. It's just not going to be as real to you. When we bought our first deal, I mean, I just didn't really understand like the price for like this concept that well. And it wasn't until I did that I'm like, oh, okay, in this market I can get this rent. So if we keep it like, man, if we can buy for 25 a pad again, it's a steal. Well, hey, I can get this rent in this market. I know that. So if we can buy at 50, that's a steal. Right. And so you're not going to have the confidence on what you can get in that market. You can call every operator and they can tell you what you're getting, but like, you kind of have to get in there and do it yourself before you have the real confidence on it. So I know I've been talking around on that, but you just got to figure out what price per pad allows you to still get your returns that you're looking for. All right. So that's the next thing I'm looking for. If I'm looking at it, I'm like, okay, price per pad. I like that. I like that. That's good. All right. Now I'm going to start digging into the numbers just a little bit more. I'm going to start looking at another thing. So I'm going to look at the cap rate. And there's like 6 different kinds of cap rates. You're like, 6 different kinds of cap rates, Derek. Shit, I don't even understand what the cap rate means. So the cap rate, I don't even know if I have a good way to explain it. I mean, it's, if I was to pay cash for this deal, not counting, not adding in any closing costs or capex or anything, working capital. That's what I would make on this deal. So if there's a deal, well, let me get into the types of cap rates here. So you have the broker's cap rate, the broker's in place cap rate, like the your in place cap rate, like sort of what it's actually doing based on how you look at it. Then you've got your Well, so hold on. Let me back up here. You got your broker's cap rate. You got the in-place cap rate of what it's, actually doing. You have your in-place cap rate based on your property tax assessment increases and adding the maybe your management fees or something in there. And then, and I wrote these down because there's like there actually is a few of them. Um, yeah, then you got your cap rate, and then you got the pro forma cap rate, right? Your year one pro forma cap rate, and then you have your like, hey, when it's all said and done, like after 5 years, what are the rents going to be, and how occupied is this deal going to be? What is that cap rate? I'm going to write these down. I know it's a lot, man. I'm writing these down, and I'm standing in front of the damn thing. How's that help you? Okay, whatever. See, I told you sometimes the board works and it doesn't work. So, like, what's the broker's cap rate? So let me see if I can even. I tried to pull some deals up before we got on here. Let's see if we can share a screen. Yeah. So here's I was looking at. Let me just make sure it's coming up. Is it coming up? Let's add it on there. Okay, there we go. So we're looking at Florida Mobile Home Parks. Um, so let's look at this deal. This is 15 units in a Popka. I love a Popka, by the way. I love a Popka. Price per unit 89, which actually isn't terrible for this area. Let's see, 8% cap rate going in. Let's see how we can figure this. All right. So now these are park owned homes, right? These are park owned homes, right? So the broker says an 8% cap rate. So I'm really going to look at this. I'm like, okay, I can get 800 here times 15. I got 12 grand a month because I'm only counting the lot rent, dude. Like, come on. You're not counting the park owned home rent. You're going to want to get a loan on this. So I'm 93,600 bucks in NOI. Did you guys see what I did there? Did I just go too fast for you? So I just took, hey, we can for sure convert these at $800 lot rent. I mean, my God, you can do that in Orlando times 12. 144 grand in gross income. I'm taking 35% expenses. I'm assuming now I'm taking 35% because if this is public or private utilities, if it's private utilities, I don't have to bill back for anything. If it's public, I know I'm billing back for it, and so I'm usually going to get the expenses to 35%. Right? So this is what I'm just going to calculate it on. Maybe I'll be at 40 with management fees and stuff. Okay, so $93,000 in NOI, right? Purchase price is 134. And I do this a lot faster on my calculator, obviously. So boom, I'm at a 6 point, about 7 cap. Would you convert these park owned homes to make it a 7 cap? Yeah, probably. I mean, you probably got to get it cheaper, right? If I'm converting park owned homes, I'd like to get it to a 9 or 10 cap plus in year one. So this is what I mean by the year one cap rate, right? Based on these prices and my numbers, right? I'm at 7%. So this is my year one cap rate, right? It's going to be about 7%. I really want to be between, 9 and 12 if I'm converting park owned homes because it's a pain in the ass and it's a lot of work. Now, my in place cap rate now, if I'm gonna look at the Well, this guy doesn't even give us any information, so how the hell are we supposed to figure this out? Um, yeah, he wants us to call. Let's see, assumable loan in place. Um, gross rents for 2025 is 167,500. It's all park-owned homes. So here, let's just say here's my in-place cap rate, right? Um, yeah, I'm going to take at least 55% expenses for the park-owned homes. Um, yep, I did that wrong. And I'm sure everybody's paying on time here. Yeah. Okay, so I'm about 75 grand in NOI. I'm 55% expenses, which they're probably giving you about 20. Yeah, I'm at a 5.6 cap, right? So this is the uh and I think I'm probably still standing in front of what you can see, but you get the point. So we're 5.6 in place. The broker's telling me 8. Right? Which that number's off because they're jacking with the expenses. Right? They So look, let's see. The broker's telling you it's an 8 cap, right? So let's see what he's assuming. Let's just back into this. Times 0.08. So he's telling you the NOI is 107,200. When we converted, we're not even getting there. Right? So I don't know what expense ratio the broker's using here. Well, he 8.06, so he thinks the in-place NOI is higher than that. And quite frankly, the in place, what the broker thinks, none of it really matters in these deals, in my opinion, in a deal like this. I mean, it does to a degree, but you want to look at like, hey, where are you going to get these two? Right. And the other thing I would say is like, hey, we assumed if we're looking at the bottom one, what's the final cap rate? Let's say 5 year, let's say we convert them to 800 in year one. We're able to get $50 a year, which my God, I know you can get $50 a year in Orlando. Jesus. You're at 1,000, right? Times 15 times 12 times 0.65. 117 divided by 1,340. So you get it to a 9 cap. So you got to get this deal cheaper, dude. It's gonna be a lot of work. And I mean, maybe you could assume you could get some money for the homes. I mean, this one doesn't look bad. Maybe these aren't that. Maybe no, they don't look that bad. But I doubt they're sending you pictures of the of the terrible homes, right? You would need to go walk these, right? Maybe you can get 5 or 10 grand for these, but I just wouldn't count any value for these homes necessarily. Now, if they all look like this, you could probably get maybe 10 grand for these things, maybe 15. I mean, this one looks pretty nice. Yeah, I mean, this one looks pretty solid. So yeah, look, you just gonna have to look at all that stuff. But I still think you need to get this cheaper. I still think you need to get this cheaper for it to really make sense. So, in trying to explain the cap rates here, I hope I didn't confuse you because we talked about, and if I move the mic too much, you're not going to be able to hear me, but we talked about the broker's cap rate, which kind of really doesn't have any value. We talked about the in-place cap rate. Let's see if I can move this over here. No. We talked about your cap rate, right? Your cap rate that based on the numbers that they're giving you, right? What that is, we figured that out. Even though this broker wasn't giving us much information to work with. Like if you know the business so well, you don't need the information. Look, I'll give you guys a tip. If you're new and you're calling a broker and telling them you need the tax returns and financials and all this stuff, they're gonna be like, you're an amateur. Like you don't know what you're doing, right? And so these mom and pop sellers too, when you get on the phone and start asking for all this shit before you have it under contract, they're gonna be like, this dude doesn't know what the hell he's doing. I don't need that stuff. Because how I play it is that, so I do need that stuff, right? I do, but not to determine whether I want to put it under contract or not. I can get a good idea if I want to buy it without looking at that stuff. I just need to know the price and how many are occupied. Really. then I'm like, okay, like if they're all park owned, then I mean, there's pieces of data I need to know, right? But I don't need the tax returns yet. I don't need the bank statements yet, because if you start asking for that shit before you go under contract, if it's a mobile home park broker, they're going to be like, yeah, this is an amateur. If it's a mom and pop seller, they're gonna be like, dude, this guy didn't know what the hell he's talking about, and you're gonna they haven't been doing things correctly, right? So they've probably been taking cash and things like that. So when you start asking for that stuff, they get a little weird, right? And if you don't have it under contract, I would not ask for that stuff yet, because when you have it under contract, you control the deals, so they sort of have to give it to you at that point. But I wouldn't ask for it at first. This is a pro tip right here, baby. Pro tip: put the damn thing under contract and then ask for all the crazy shit. Okay. Anyways, I digress. But getting back to this, your in place cap rate sort of matters. But in my opinion, and I put green around this because this is what I'm really looking at. Your year one cap rate, right? And again, I'm still looking at the price per pad, right? I'm still making sure that the price per pad is cool. Like, but I'm also looking at this too. Now, that may look complicated to you. You're like, damn, Derek, you just freaking confused me with 5 different cap rates. Well, this is just how I look at it. But I'm doing this like I process this super fast. Like it takes me 60 seconds to calculate all. Okay, the broker says it's this. I already know that's crap. The in place cap rate, okay, it's this. So what I do with that one is I can use the in place cap rate to argue with the seller and be like, he's charging too much. If the in place cap rate is 5%, I'm like, dude, you're charging a 5 cap. This place is a disaster. So that's really ammunition for me, the in place cap rate, and what I think it is, because he'll be like, well, no, it's an 8 cap. I'm like, well, are you calculating property taxes into that? Because in Florida, you get reassessed at about 2% of what you buy it for. And if he's not calculating that in there, that makes a big freaking difference, because the property taxes are going to triple. Okay. Your in place cap rate, right? So you're kind of going to use both of these as an arguing point. The in place and what it's actually doing as it sits now, and your in place cap rate, and then the year one cap rate, and then the final cap rate is just something for you to look at, down the road. I hope I didn't confuse you. If I did, just shoot me an email at derek@victorycapital.com. So that's another way that I look at it. Now, I'll tell you when I'm going through this stuff, right? This is all what I do before I put the deal under contract. Like I had, as you can see, like this is all cell phone math right here. I haven't even put it in the pro forma yet. Okay, because that's when the numbers start to get okay. I need to look at, I need to get the numbers more precise, because I need to calculate in my capex budget. I need to calculate in closing costs. I need to calculate like the actual expenses, right? Taking their financials or their utility bills and factoring all that stuff in, right? So I'm going through all that stuff, and then I calculate these pretty quickly, and then I get to the pro forma, right? So I hope some of that makes sense to you in what I'm looking at. And all this is just kind of a different way and a different lens to look through the deal, right? And it all goes back to knowing that market, right? What really matters when you're finding the market? We talked about the population. We talked about, home values. We didn't really talk about, rents. I like 2 and 3 bedroom rents, apartment rents. You can look at that. I like to see what other people are charging for lot rent. And I like to see what other people are charging in park owned home rent. Right. That's how I'm going to tell whether I like this market or not. Okay. Now, when I'm talking to you about, the don't get mad if you're a broker. I love you guys. I have tons of brokers, and I say that the broker's cap rate is wrong. You got to understand, guys, the broker is working for the seller, so they are doing their best to sell the property. And I work with a lot of great brokers, right? And you just have to You just have to understand that and what you're looking at. But everybody's doing their numbers one way, so nobody's really lying. We're just doing the numbers, differently. And I'll say this, right? Like, so I've never been on the sell side before. We got a couple of our smaller syndication deals that we might end up, we've looked at potentially taking some offers on. And all the stuff that I hated that the sellers would do, like this, like, hey, telling me it's this cap rate and telling me it's, and a lot of times it's not the broker, by the way, it's the seller saying, no, 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 no. Well, I'm 15% expenses, boy. It's a 9 cap. So what I've learned is that when you're going to sell your properties, you do the same shit. Because I'm like, oh yeah, we're gonna count these 2 vacant park-owned homes here because they're gonna be sold by the time that we close. And see, when I'm buying, I'm like, I don't like that because they're not filled yet. I'm not giving you credit for that. So, and yeah, I don't like the property tax sort of proration on the assessment of the value of the property either because it lowers the value, right? It just does. Right? So all this stuff is like, we can be unreasonable and irrational as buyers. We can be unreasonable and irrational as sellers. And so, everybody can be because everybody's trying to get their own and do the best they can on their properties, right? So I'm not hating on anybody, right? And nobody's perfect. I'm not perfect, and so we're trying to, brokers are trying to get the best prices they can for their sellers, which that's their job. That's what they should do. I'm trying to get the lowest price for myself and my investors because that's exactly what I should do. And so there's always a little boom. And if I'm the seller, I'm trying to get the most for myself and my investors. So yeah, it's just funny. There's always a little like, you're arguing on like, well, the numbers are this. Well, the numbers are this. Well, the numbers are this. Whatever. We can kind of play with the numbers, and everybody's got their own ways of looking at deals. Okay, let me see if I missed anything here on this. I hope this was of some value to you. I think I digressed a little bit when we were talking about the location again. Um, I just think if you can figure these 2 things out with certainty, it's gonna be so much easier for you to put deals under contract and buy stuff. Because if you don't know that, like, the certainty drops, right? I know for like the deal we just closed, I got it, and I'm like, oh God, it's a 58,000 unoccupied pad in the Tampa metro. I know that's a good deal. I don't need to look at anything. Right now, of course, we went into due diligence and we looked at stuff. I'm like, yeah, I'll take it. Like, do you have that kind of certainty? Right. And that just comes from me poking around the market a lot and doing a lot of math on deals. Right. But like, I know that with certainty. Right. And if you knew that with certainty, you're going to know when your deal comes. Like, we just put a deal under contract in the DFW metro. I'm like, bang, it's a good price per pad. I think we're at like, I don't know, sub 70, 65 price per pad. I'm like, bang, that's a good deal. So I got to tell you guys, I mean, that's how I look at it, right or wrong. You can call me wrong, whatever. But that's just how I look at it. That's just how I look at it. So look, everybody, thank you all for joining the MHP show. If there's anything else you want me to hit on, I just wanted to tell you guys today how I'm looking at some of this back of the napkin stuff. We can pull up a pro forma at some point. The board sucked. I didn't like it. If you did like it, let me know, but I just need to figure out a way that you can see it better. Maybe I need to get a clip-on mic so I can move away and talk on the board too. But yeah, look, if you have any questions, if you need something clarified, shoot me an email, derek@victorycapital.com. I'll try to get back as soon as possible, but just give me maybe a day or two to do that. We've got many deals under contract and some that are very close to going under contract now. So look, if you want to be a part of what we're doing, if you want to be a part of our fund, if you're sick of the stock market ups and downs, if you're sick of having cash sit in the bank, don't be scared, man. I know it's scary the first time that you send money. But look, these assets are great, man. They're stable. They just sit there after they're stabilized. For you especially, because you don't have to deal with the management. We deal with that, and you probably don't want to deal with the management. We had somebody that was looking to invest with us. They decided not to, and they went and did a deal by themselves. And great person, by the way. Like awesome, awesome husband and wife. And they wanted to go give it a shot to try it on their own. Absolutely. And I suggest that you do that, because some people may do it and find out, man, I like this. I like grinding through this. Right. And then some people do it and they realize not. Right. And so this couple was like, hey, I got an email like, hey, look, I like this, but I'm definitely not going to do the active investing thing, because they have a business. They have a successful business. So dealing with the BS and the contractors and stuff is just not fun. Right. And it takes up time from them producing at the activity that got them to in a position that they were able to invest in the first place. So like you only have so much attention to go around. Right. Like, and if this pulls it away from the main, golden goose, right? Then, the golden goose won't produce as well. Right. And so this lady's like, hey man, I will never do this active thing again. I'm going to invest with you. Like, let's jump on a call. Okay, great. Right. Um, if you've already decided that you don't want to be an active real estate investor and you love mobile home parks, like I'm telling you guys, this asset class is awesome. And most of these deals I'm very conservative on, and a lot of them end up performing better than I think that they will perform. Anyways, guys, look, you can reach out to me, Derek@victorycapital.com. Reach out to me on the social media channels. Would love to help you in any way I can. I know I was jumping around today, but I hope I was able to provide some clarity. Like I'm telling you guys, find that location, price per pad. Get so confident on it that you're like, man, dude, I know these deals. Boom, you're going to get deals. Boom, and you're going to know instantly. You're going to have so much confidence and so much certainty once you figure those two out and what that means for you. Okay, guys, we'll see you all next week. I don't know if I'll leave you with any philosophical wisdom for the week, but maybe I will. Maybe I will leave you with something here, man. Let's see. What do we got? What have I learned this week? Because I'm always learning, right? I'm always learning and trying to get better. But I'm always trying to block out the noise. And if you watch the news or if you get on X, like it can be kind of depressing. You're like right versus left, and it's just crazy, man. It's like, oh my God, these guys are idiots. Oh my God, these guys are idiots. Like, you got to limit yourself to that stuff, man. If you got goals and you got targets and somewhere that you want to go, like you got to limit yourself to that stuff, because actually it's just sort of a control mechanism where they're like, oh yeah, everything's good. And they crush you and say everything's not good. So you're like, everything's good. Everything's not good. So what does that then make you? It makes you susceptible to outside circumstances. You start to look to outside circumstances to give you certainty and confidence, when actually you're the only one that creates certainty and confidence. You feel me? You feel what I'm saying? That's all created by you. So just get out of the noise for a little bit. You got a target, dude? Like, bang, let's go hit the damn thing. Yeah, there you go. I hope it helps. Well, anyways, thanks for watching the MHP show. I will see you all next week. Peace out. Ciao. Adios.